Hi, and welcome to the first videos of 2025. And in fact, we're going to change things up slightly and take a look at what's coming up in the week ahead. So welcome to this week's Market Outlook, where we're going to explore the key events expected to shape the market in the days ahead. Our focus this week turns to major economic data releases from the USA and from the UK, starting with December's inflation reports. Well, let's take a look at the US inflation rate. In the USA, inflation data will be released on Wednesday at 3:30 p.m. GMT +2, and this report could have significant impact on market sentiment. The minutes from the Fed's December meeting revealed growing concerns about rising inflation risks and pressures, suggesting that the anticipated rate cuts this year may be fewer than expected. A lot of that is being blamed on the potential of tariffs being imposed by incoming President Donald Trump. Let's take a look at the figures, where we can see there was a low of 2.4% in September 2024, but since then that inflation rate has ticked up slightly, leading us to our last figure in November of 2.7%. Traders will be closely analysing how the actual data compares to these forecasts and whether it edges closer to or further away from that Fed 2% target. Now, of course, higher inflation may well support the US dollar, which has been relatively strong recently, but clearly these figures are going to have quite an impact, and the uncertainty of what's going to happen with the incoming president certainly playing on investors' minds. Okay, we've taken a look at the US. Now it's time to take a look at the UK inflation rate. So back over our side of the pond, and UK annual inflation data for December is also due on Wednesday. That's 9 o'clock in the morning, GMT +2. Now in November, inflation climbed to 2.6%, which was the highest figure we had for 8 months, obviously moving further away from the Bank of England's 2% target. If this trend continues, it could strengthen the British pound as the likelihood of upcoming rate cuts diminishes. We have obviously ticked up since that low in September, 2.3% I think it was in October, 2.6% in November. Clearly inflationary pressure rearing its head once again, and the pound has been on a poor run the last sort of 7 days or so, hitting multi-month lows versus the US dollar. So as ever, these inflation figures are going to be key, and really from a UK economy perspective, we need to see that inflation level tick down lower once again. Okay, thirdly, and staying with the UK, on Thursday attention will turn towards UK GDP growth. The monthly figures were coming out on Thursday at 0900 GMT +2. Now, following a contraction in September and October, better than expected data could provide a boost to the pound, which would be much needed, and also would reflect signs of economic resilience. But is that what we're going to see? 2 previous months, we saw a negative 0.10 figure, and a third negative month would concern investors and economists alike. Obviously, probably GDP more closely scrutinised on a quarterly basis, with talk of recessions for 2 quarters in a row, for example. There does seem to be a little bit of concern in the markets. We could see another contraction. We're going to have to wait and see, but Thursday morning will be key to looking at the strength and health of the UK economy moving forwards. Okay, finally, it's back across the Atlantic to the United States of America, and it's corporate earnings season. As ever, corporate reporting, we tend to see the big banks are the ones that come out first. And in the US stock markets, of course, the indices, or the major indices, are continuing to correct after the record highs that were set in early December. Now, the financial institutions are going to release their quarterly earnings for the fiscal quarter ending December 2024, and we picked out a few to keep your eyes on. On the 15th of January, reports will come from JP Chase, expectation of an EPS of $4.08 and expected revenue of $41.9 billion US dollars. Also on the 15th, we have BlackRock. Their earnings per share estimated to be $11.3 with a $5.6 billion revenue. And Citigroup, expectation there 1.22 for earnings per share and 19.51 billion US dollars revenue. The reports keep coming pre-market. On the 16th of January, we've got the Bank of America, 77 cents we're looking at for earnings per share estimations, and revenues in the region of £25.12 billion. Also on Thursday, Morgan Stanley released their quarterly results. We're looking there for an EPS of $1.68 and revenues in the region of 14.98 billion. As we know, the markets have been seeing a bit of a correction since December's rally and highs. So these could well be key for what we expect to see coming out from other companies in this reporting season. So keep your eyes on those figures. Of course, don't forget your risk management techniques in the week ahead, and stay updated with FXOpen's Market Pulse, available on the website, where you can see some deeper insights into these and other stories from the last week and moving forwards. Thanks for watching, and we'll see you next week. Bye for now.